Hello everyone, it's me, Dimitri from Gracious Interests. Hello everyone, welcome to the 14th episode of Blockchain Talks. Today I will be talking mostly about fundamental analysis, technical analysis, how to perform them, what pointers to take into account, etc. etc. So, in short, how to recognize a decent blockchain cryptocurrency project. Before I do that, naturally, I want to make many viewers happy, and naturally we're going to take a little look at the state of the market and make some prediction movements here. So let's see. I've got to start sharing my screen. I was already looking somewhere you guys couldn't follow. My apologies for that part. Yeah, there we go. So CoinGecko, yeah, everything's in English. We'll be making use of this site also for explaining the fundamentals. I'll probably be giving an example on how to do so. Anyway, current market. Well, yesterday we had a tremendous dip, tremendous crash of the entire crypto market. How it came to be, well, I really didn't have the time to look up what exactly happened, though a majority of theories are abound. With that, I want to say, well, all ranges from a sudden sell-off, as El Salvador, since yesterday, has Bitcoin as an official currency within the nation. And it might have been, well, a nefarious, let's say, authority, bank, governments, major investors saying, okay, we're going to manipulate the markets and scare El Salvador a bit off, or it might have been El Salvador themselves manipulating the market on beforehand, that a little price crash would occur. And, well, the market crashed. Nothing much to do about. I still have to see. Well, we can actually do so here. Let's see on Telegraph if there's some news articles which will explain what just recently occurred. Culprit amid leverage wipeout. Not all holders was selling, so there are a few theories. The end of the bull run. Buy. Fixes crypto wallets. Shopfall linked to stronger US dollar gold. Correlation shows. Well, that's actually a strong pointer. I tend to take a general look at the value of Tether. Tether is a stable coin whose value tries to imitate that of the USD dollar. I base myself on the movements of Tether in order to make a decent prediction if, well, a major move is going to occur. Generally, when the value of the dollar suddenly plunges, will Bitcoin suddenly rise in value? The inverse is also true. Tend to look also at the economic state of, well, at the state of the economy at the time being. But it doesn't seem to be all that much news here or much theories on the why. So the only thing here, not Solana. It's one of the previous articles here. Let's just see. Go to market route. It was from yesterday. Let's just see. It's the miner remote who was blamed for major BTC sell-off. So they think it were the miners mostly. Should failed to stick at support. That he said 44,000 could be next. That's true. He subsequently not close the weeks of CMS future gaps. Should blamed large volume traders. Probably, well, they're most of the time pointing at whales doing a major sell-off. For what reason? To take profit, maybe. To help El Salvador out to buy on the cheap might also be a possibility. So yeah, there's a few possibilities going on. Now, price predictions. Actually, to make a price prediction concerning the market, I'm going to take a look at Bitcoin itself because, well, it still has the majority of the dominance on the entire crypto market, still at 40%. And currently, it seems to be stable major dip here, deep early this morning at slightly after 10. That's Brussels times. Let's see. Naturally, I try to zoom out to make better predictions. Sunday, 14 day. So yeah, as you could see, we were climbing. However, it wasn't as steep, and there was some volatility going on. We're trading above the 52K level. On that account, I want to say I more or less expected a drop here. By reason, well, if you start zooming out in the last month, there we go. This is actually a bit of range trading between the 50K and the 45K level. So a range of about 5,000, something we had a few months ago where we were trading at the 40K range. Where I always said, well, I can only speak of the next leg up as soon as we are trading above the 42, 43K level. It did consistently for that time being, and we had a leg up towards the 50,000 with, as you can see here on the 90-day range, few tests here. I made the predictions about here. So we're trading in range between, was it 40,000 and, yeah, it's here 30,000, but if I'm not mistaken, it was slightly below the 35K level. Then we had a major leg up. So at this point in time, I'm expecting more or less the same movement. Yeah, so we had a major crash, fell down to 46K-ish level. For the time being, in the forthcoming week, I dare say, we probably remain trading here within this range, somewhere between the 48, 46K level, keep on bouncing up until, well, the next major movement. Yesterday's Dutch episode, we had plenty of good news. That's why we call it the Good News Show or Good News Show. It's almost the same in English. By reason, well, there wasn't really any FUD, fear, uncertainty, doubt to be shared. And there were actually quite some bullish parameters playing out on the long term. I also want to correct myself from previous live streams where I mentioned the Taproot update, where I said it was probably foreseen for September. Correction, I was wrong. It's in November. But still this year, it's also a bullish signal. For those who do not immediately follow my live streams and are curious what Taproot is, in short, Taproot is an update on the Bitcoin blockchain, which enables, well, to free up space on the blocks on the blockchain. That's actually a positive signal. It implies that transactions will be going down faster. There's more room for transactions to be saved. So you are more certain that your transaction will be saved within the 10-minute block interval. A higher probability, I'm going to say, doesn't necessarily make it so. By reason, everything depends on the amount of trades, naturally, and the transaction fees attached to it. But as a general thumb of rule, more transactions will fall within the 10-minute transaction confirmation and saving limit. So that's some actual good news. So to rehearse my prediction here, we will be still range trading, and with range trading, I mean 50K up until here, 45K more or less. That's the range wherein we shall be trading the forthcoming days. Bullish signals abound, so it might give a second chance to a next leg up. The sooner the better, I dare say. Naturally, I love seeing my wallet increase in value, but you never know. Things might turn sour. We saw that a few months ago with the China FUD and the sudden crackdown on miners. Anyway, let's get down to business and talk a little bit about the subject of today, doing fundamental analysis and technical analysis. Now, many people come to me, my DMs on Instagram, Twitter, and they ask me, well, Dimitri, how do you perform such a fundamental analysis? How do you perform a technical analysis? How do you know what coin is going to moon next? And that's actually the major question many people will ask to me. When moon? what is the next Bitcoin? And well, there is a four-letter word within the crypto community that you need to take into account as a trader. That one being DYOR, D-Y-O-R, which stands for do your own research. And that's actually the basic premise upon which everything relies to make a decent investment. If you invest in stocks and options, well, DYOR applies there too as a standard given. So how do we do that? Well, quite simple. I'm going to show you with a live example. I do this daily. I do this on a weekly basis in my other live stream, the Crypto Bull. There I'm going to get deeper into a specific coin, talk about it, learn its use case, etc., etc. But now I'm going to simply pick up a coin at random. That's why I'm going to reshare my screen and show you on CoinGecko how you do that. Say, for example, let's take a low cap coin. It's 1911, that's 2021, page 3. Up, there we go. I'm really going in at random here. 1911, there's 3 digits. That's 10, 11, 21, 121, no, 221. Let's take that one, which is SUSD. I believe that's going to be a wrapped one, so I'm going to take Bifrost here. So, technical and fundamental analysis. What do you need to know? Well, quite frankly, you can learn a lot by simply looking at the graph of its value, of its historical run. As we can see here, incepted December 21, 2020, September 8, 2021. Was incepted, and most beginners will say this is actually a very positive sign. By reason, well, since its inception, it has grown in value. So it implies it might probably moon again. More experienced traders, slightly more experienced, will notice, okay, that's the entire run. It seems it peaked here on August of this year. When was it? 2-3 weeks ago. But now we're seeing it's on the decline. People will say, okay, it's on the decline. Perhaps I should buy in now. However, there say is, in case of doubt, zoom in or zoom out. What do I see here? 14-day range, it is going down. 30 days, it had a major uptick. Probably implied it has been shilled. So that's the kind of graph I want to see. So always zoom in and zoom out. What do we see here? Okay, value, mooned again, and now is in a sudden decline. And people will say, okay, seeing that graph, it would be interesting to invest now, as it might, on the long term, start to increase once again. What I dare say is, do not do so. I'm a more professional trader. By reason, these jumps are actually quite suspicious. This one and this one. And you must ask yourself, what occurred over there? And that's where a fundamental analysis comes in. By reason, you are going to explore the community, so all social media, news article, blog articles, to see what occurred and what's living with the project. Is there active development? Was there a sudden new update? Was there an upgrade? Was it being shilled by certain certain YouTubers like BitBoy, where he said, yeah, it's the future, etc. Because these jumps generally are a result of direct shilling. Certain people who follow BitBoy invest on the spot. As soon as he mentions a coin positively, they will start to buy in and think later on it will moon. And generally, well, they are too late. They tend to buy in here and start decreasing in value. So not a good move. Anyway, so always heed such jumps here. Actually, you can start zooming in to see. Now, why did I say take a good look at the max run? By reason, it gives you an idea when the project was incepted. It also gives you an example on how it behaves. And what do I see here? Well, here it started more or less. It peaked, and on the downside. This is actually the kind of graph which shouldn't really give you trust in the project. By reason, well, it suddenly mooned too fast and is back on the decline very fast, which implies something did occur. This is not a normal graph, this is a graph of a community being shilled, of, well, manipulation on one or more levels. So that's something to hit for. A decent graph you want, and I'm going to refer to, I'm going to open up a second tab here. This is a project I'm not immediately a big fan of, but here we are. Kind of graph you want to see in a project you invest in is something like this. Solana is a very good example. The reason you start low and there's a gradual build up. You see, okay, there's some volatility, it might go down for a little while, but it goes up. And naturally, you see here a big immediate run, but if you start to zoom in, you see that in all actuality, it aren't tremendous, sudden, big jumps. The jumps are okay, they are of a normal, moderate, growth-like level, not something like you see here with Bifrost. You have a sudden jump of, what was it here, 0.04, of more than 10 times on less than 2 days' time. That's an impossibility. So that makes it already a bit shittish as a coin. Other graphs you must take into account are those who start up high, suddenly crash and remain down, or the same but with continuation, seeing such little hills which correspond to the cycle. Those are indications that it's actually a project which is dead, no development, and only during a new cycle get locked some new funds in by old investors trying to shield the coins, few people trying to find a new coin to moon, etc., etc. Others are more volatile, start high, crash down, remain low for a long time, and suddenly start growing once again. Those are the kind of coins you want to take a deeper look at. By reason, if they start to grow once again, it implies probably that developers are busy doing something. So that, in short, is, well, the explanation of the charts here. Like I said, with Bifrost, this is suspicious. Viewing this graph alone, I wouldn't trust it, wouldn't invest in it. However, what I also say during my crypto bull live streams is to take into account the date when it's listed, and if you can do your research, look deeper into when the project started. Myself, as a general rule, and I stick by it, is to invest in projects which are at least 2 or 3 years old. By reason, on 2 or 3 years' time, the project has shown that it can carry some merit. It might have been incepted during a bull run, it might have been incepted just after it, but it has time to, well, iron out the errors, the flaws, and that will be easily translated into its graph. You might see a few peaks, you might see it crashing down, etc., etc., but it tells you how well it is performing. And I know there are a lot of people who say, well, some start high and crash down, sudden sell-off, but remain at a low level, but it doesn't imply the project's dead or it's a bad project. General rule of thumb, if it starts high, gets low, and remains trading on the low, it's a dead project, and at that point it's, well, covered with shillers. So don't invest in it. The general rule, steer away. Also, as a general rule I apply, is to take a look at the max supply or total supply in relation to the circulating supply. By reason, well, a decent project has a certain max supply. Why? Well, it implies that, well, to invest in, naturally, a max supply implies there's a hard limit on the amount of coins to ever be produced. It invokes the idea of rarity. It implies that it will increase in value over time. Circulating supply is actually a good measure to see how well they are developed. As you can see here, well, they started in 2020. There are about 3 billion coins, almost 4 billion to be produced. They are not even at one, so 1/4 in. You might expect the last coin to be mined probably somewhere in the following 4 to 5 years. Then rarity will occur, and let's hope the project will continue going on. However, just as you can see here, circulating supply is quite high in relation to the max supply. However, everything depends naturally on block time and how many coins are being mined per block with the halvings, etc., etc. So it might be actually longer, 4 to 5 years. Made a small mistake there, but anyway, what I wanted to get across here, the circulating supply is that it gives you a certain measure where the project is in the development stage. If it's quite low, well, it implies it's just beginning, like this one, just beginning, and that it might have some potential future-wise. But like I said, only investing coins 2 or 3 years in at the very least, so it still has to prove its merit. I also do when I see a contract like this. Well, that's a handy tool. It's called Token Sniffer. And what does this do? Well, this is actually nothing more than an online verification program. I'll need that one. And you can copy the address here, and you can actually verify if other tokens alike or contracts exist. And if it doesn't check out, it will immediately give you a sign. Watch out. Might be a possible scam, might be a fraud. So, and generally you get an indication of similar token contracts. Yes, here Biffy and Centaur are, especially Biffy for 99%, is based on the smart contract of, well, what was it? Bifrost. Which implies, well, it's an original contract made from the ground up. So it's a forgiving factor. Always look at a website. What is very important is to look at the white paper. Why? The white paper, open yourself, is actually the most important piece of paper for any blockchain project. If it is easily accessible, easy to be found, it implies the developers are open about a project, that they are open to scrutiny, feedback, and verification of their work. So seeing a white paper from the get-go and seeing it mentioned from the beginning is actually a very good sign. Many shit projects, shit coins, do not do so. They are content on being and remaining tokens or coins, whereby you have to take the word of the developers. Naturally, they may say, okay, our source code is available on GitHub, which is the case here with Bifrost also. Hold on a second. No, not available on GitHub. My apologies here. Small mistake. So yeah, to continue, anyway, source code might be available on GitHub. You can verify if you are a developer to start building on it. However, many investors aren't really known with programming, and many lack the basic knowledge to set up a master node, mining equipment, core wallet, etc., etc. So it's a little bit of a bluff, like they say. But having the white paper available, especially with hyperlinks, neatly done. And actually, this is quite neatly done. I know there exist plenty of projects, both shit projects and good projects, with many more visuals and drawings and hyperlinks, but it doesn't need to be that nice, that complicated. Example here with Bifrost, the simple paper, almost copied from Word, but it contains the necessary data to do a full-on analysis. If you have some ICT knowledge, well, you can actually read through it. In other cases, it might be sufficient to, well, read up a little bit the basics. Next to a white paper exists blue papers or light papers. Those are a little bit the same like white papers, but are more general, are more in plain English, aren't as sophisticated as this one. scroll through here. Mostly white papers have some, well, for reading white papers, you need some specialized knowledge on programming and programming language and certain architecture in ICT. Isn't all that bad, but you know, you can read it, and availability of a white paper is a good sign. So for Bifrost, that's a good sign. Let's close it down. I also tend to look at the explorers. What are the explorers? Those are blockchain explorers. They give a sign how a project is being built. See here, Bifrost, BFC, but Explorer, Etherscan, Explorer. What does it mean? Well, in all actuality, Bifrost isn't a coin, but a token. What's the difference? A coin has its own blockchain. A token makes use of a different blockchain, which implies, well, the definition is different for a coin and a token. A coin is a factual holder of value. Token, on the other hand, is a substitute or a placeholder for value. It implies that the real value is to be found somewhere else. A coin actually has value. Bitcoin has value. What hasn't got value? Well, for example, wrapped Bitcoin. Wrapped Bitcoin is Bitcoin made available on the Ethereum network, for example. That is tokenized Bitcoin, which implies, well, somewhere there's a wallet being linked to the wrapped Bitcoin, and to the use of a smart contract, the wrapped Bitcoin has equal value to Bitcoin. However, wrapped Bitcoin is a token. Token being, well, given to the investors, anyone else trading Bitcoin on the Ethereum network. It is a placeholder for value. Its value equals that of a certain coin, but it hasn't got the value itself. Value itself is stored somewhere else. That's the principle of a token. What else can I say here? Yeah, naturally, a little bit dumb of me. I tend to take a look at the various communities. Why? Various communities give you an insight on how well something is performing. Yeah, Telegram, to close it down, don't have it here. Twitter, for example. You can always check out the account, and what I do to verify is to see the amount of followers in relation to the amount of likes and retweets. For 12K followers, 144 likes, it's doable. It means it's genuine. 17 response, so there is some interaction. I also want to see naturally retweets and, well, really association? No. Interaction, yeah, with the community itself. Why? Interaction with the community itself implies that the developers are actively listening to the community. If, for example, there's a social media from the project itself, let's say Reddit, and you see on Reddit that, well, it's mostly and mainly about updates and news articles, and you see a lack of memes, responses, actual questions, well, that should be a red flag. It implies the community isn't really interested in the project itself, but if it has high value, it's mostly interested in making money, meaning they buy in to make money and do not care about the use case, or that its use case is simply as redundant and obsolete as can be, but they have a good marketing team and people will only sell and buy it for the value and not for real use. That's a sign of an overvalued project, of a shit project. I can say here about Bifrost, like I said, we're doing a quick run through here. I see retweets, I see interactions. So this implies there's an active community. They listen and it isn't riddled with, well, plenty of updates. That's a good sign. Oh, close yourself, damn it. There you go. Was there something else? Community Facebook. Quite rare. And oh, it refers back to WinGecko, so it's a broken link. Anyway, so always check out the communities and what kind of content is being shared. Be it on Instagram, be it on Twitter, be it on Discord, Facebook, Telegram, Reddit, whatever. See the kind of content which is being posted. See the amount of likes, see the amount of interaction. A healthy project has a healthy mix of blog and news updates, of memes, of questions, of updates, etc., etc. A dead or bad project will only post news articles and updates, or has too much crowd interaction. And with too much crowd interaction, I dare not say that the developers or the marketing themselves are actively responding to everyone, but that the communication is one-sided, that a lot of the community is asking questions. How do I set up the wallet? Where can I buy it? What happened there with the price? What's going to happen with, etc., etc., etc. If plenty of such questions arise, that's dead on a red flag. It implies, well, that it's a money grabbing project at that point, that people have been suckered in, and that they are probably starting to make a loss, and that the project isn't valid in itself. I could tell on Twitter, Bifrost is actually checking out. Now that I'm seeing this, I'm actually wondering if I shouldn't do a Crypto Bull episode on this one. Probably not. Anyway, what I also do is to verify a little bit the exchanges. Why? The exchanges where the projects are being listed is of, I wanted to say secondary nature, no, is also slightly of importance. On one side, to know where can I buy it, and naturally to know where most of its trading volumes are. See here, a bit, BitHump, Uniswap, Gate.io. With the exception of Uniswap, the others are slightly unknown. But they are centralized exchanges, probably, so that's actually a good sign. Many shit tokens, shit coins, tend to be only traded on DeFi, decentralized exchanges, such as Uniswap version 1, 2, 3, PancakeSwap, etc. That's a sure sign that you are talking about a shit project. If all the exchanges where it's listed are DeFi, by reason, well, on DeFi, people might say, yeah, but that's the means to remain decentralized and that the money remains in your pockets. No. It implies there's a major focus on yield farming, that their focus is not on earning credentials, on being a valid and sincere project. It is about making money by swapping their own coins for more higher valued coins, like swapping it for Ethereum, swapping it for Binance coin, BNB, swapping it for Bitcoin, etc., etc. Their own money making is about, well, taking your dollars on one hand, or switching over and taking up decent, real high value coins. So if you see the majority of exchanges being DeFi on a just starting token or coin, don't buy it. That's sure a signal it is being shilled. It's a shit project. So with that, I'm going to conclude this episode. Hope you guys learned a few things here about doing quick analysis. Naturally, before I forget, when you're doing an analysis, also take a good look, that's slightly more experienced level, at the used consensus protocol. You've got proof of work, proof of stake. With proof of stake, you've got plenty of variations like delegated proof of stake, proof of authority, proof of history, etc., etc. What you need to know when doing the fundamental analysis is to see if the consensus protocol adds up with the use case and general view of the project. If, for example, the project is something like a new network to develop decentralized applications, well, a good consensus protocol for scalability and development would be something akin to proof of stake, not proof of work. By reason, well, proof of stake will enables faster verification and validation. It implies, well, you need some technical knowledge naturally, but it requires less effort for validation, which implies scaling happens much faster on much larger scale. If you say, well, I'm going to make use of a blockchain within my own company, but I still want to have influence over anything that occurs within a company that is blockchain based, well, you're going to need a consensus protocol like proof of authority, by you hold the authority to make changes on the blockchain. Simple as that. Now, you should start to become distrustful when you notice the consensus protocol doesn't add up with the view and ideas of, well, the project itself. Popular coin here, Ethereum, for example, currently is still running on proof of work, but is actually a development platform. So on the get-go, they should have been proof of stake from the get-go. Now, forgiving factor here, they are trying to transition into proof of stake. However, in my opinion, slightly too late. They were better off creating a new blockchain from zero on and not meddling about with the current one. My apologies. Lesser known fact. Damn, sorry. Ethereum itself actually started out as an altcoin to Bitcoin, and well, during its inception, its very first days, they weren't really about developing applications, decentralized applications. They were about, well, making money like Bitcoin. That changed afterward, and they started to focus on, well, decentralized applications. But all in all, yeah, the gist is the consensus protocol must add up to the view of the project. If you're starting a new network or something like Ethereum, proof of stake is consensus protocol you want. If you want to create a new Bitcoin, well, something like proof of work does the trick fine. You want it secure, you want it decentralized, etc., etc. So take a good look at the consensus protocol, find out how it works, and try to see the relationship with the blockchain project where it's being used. If you see that it doesn't add up, bail out by reason that it's going to be a broken blockchain, and well, you're going to make losses. So yeah, this all might sound very, very complicated. I hope with Bifrost that I used as an example coin to do an analysis, things became clear. Now, if it isn't all too clear, you guys can always ask me questions in the DMs or in the commentaries down below. Or if you want to help support me, my course titled The Crypto Bull actually has a dedicated page on how to recognize shit coins, shit projects, or decent coins and decent projects. It also has an additional little page with a little questionnaire you can easily fill in and deduce the answer if it's a good coin or a bad coin. Simple as that. So yeah, I generally advise to take a look at my Crypto Bull course. Just at those pages, there's also some trading information, which I'm not getting all too deep into it in this episode. And yeah, thank you all for watching for this episode of Blockchain Talk. Hope to see you guys soon. This was Dimitri. This is my cat's derriere, who is once again annoying me, Crypto Cat Tilly. So bye everyone. Thanks for watching, and up until next time. Bye.